All right. Thank you, everyone, for joining us for this particular session. My name is Ramanyang. I am a business journalist based in East Africa. I do a fair bit of work for China Global Television Africa. I also do write a fair bit for Bloomberg as well. Thank you for your time this afternoon, this evening, wherever you're joining us from across the world. We're going to be having an interesting 30-minute conversation with Herbert Wigwe. He's in charge of Access Bank. It's a fascinating financial institution, over 31 million clients, pretty much right across the continent, arguably by many metrics, one of the largest single financial institutions that we do have across the African continent. We'll be discussing a range of issues with Mr. Wigwe over the next 30 minutes or so, covering everything from what the future of banking looks like, how's the COVID-19 pandemic affected banking operations, not just for Access, but of course for the Nigerian banking sector as well. Questions around expansion. Where do you go next after building an institution as large as Access? How do you expand it? How do you grow it? What sort of competencies are you looking for? All that and more will be answered in the next 30 minutes or so. Mr. Wigwe, thank you very much for your time. I appreciate it. I believe your mic is still a little bit off at the moment, so it does need to be turned on. Apologies. This of course is what usually happens.
Thank you, Rama. Can you hear me? Am I audible now?
Perfect. Yes, you are. It's emblematic, really, of how our world has changed in the COVID era, isn't it? We're all holding these remote meetings now.
Yes, I've had 4 of them already this morning. 4 board meetings.
Well, I hope this one will be just as enjoyable for you. So let's start with a broad picture. The big story around Access Bank for the last year or so was around the business of merging with Diamond Bank. Let's start there because it'll inform the story around your expansion strategy later. How's that going?
It's going quite well. As many times as we've done it, we will get better continuously. There will always be lessons to be learned. We've been able to pull out most of the synergies. We're running under one brand. We've been able to basically ensure we run on the same platform, our technology is integrated. So I think it's coming quite well. Obviously, culture remains a slight issue, and it's an issue only because throughout last year, in the middle of COVID-19, to be able to put people together and for you to have one single culture running wouldn't have been that easy. But having said that, of all the measures we've done since 2002, I think it's come on very, very well as it can possibly be.
So moving forward, though, because what I've noticed looking at the history of Access Bank is that you've grown the bank relatively rapidly, in part by mostly these acquisitions that you've made, and a couple of more that are in the pipeline. Bank ABC, for example, in Mozambique, Grow Bank in South Africa. But before we get to those, I'm curious, walk us through your thought process when it comes to merging, or rather figuring out what your next merger, your next acquisition target is.
All right, so let me take you through the history. I mean, when we basically got into Access Bank in 2002, we knew it was a race against time, and that at least in the context of Nigeria, which basically had the largest economy, if you were a very small bank, you didn't stand a chance. Regulation would go against you. Everywhere in the world, the top 5 banks control market share and all. Now, initially, our strength was wholesale banking. At that time, my partner and I decided, let's just play according to our strengths. Let's sit down and only bank the top corporates. Let's provide them strong trade lines. Let us use technology as the edge. Let us work with multilaterals rather, to provide seamless services and huge lines to support these people. Because at that time, we had with a tiny little institution. So we created a 10-point agenda, if you like. Now, at the time we're doing the first set of measures with Capital Bank and Marina, our objective was just merge according to with institutions that share the same, not just the same type of values as you are, but have wholesale customers, because that was basically what you needed. And why did we need wholesale customers? We knew what to do with them. And if in the course of growth we needed to shrink our balance sheet, all right, using our value chain arrangements, we could do it very quickly. Now, so that was very successful in the first 5 years. Now, so there are 2 strategies in merging. You either say, look, I'm looking for somebody who would complement me in terms of supporting the nature of business that I do, or I'm basically going to go down market and basically extend my retail network. So as we finished the first set of acquisitions in 2009, I think it was, our mind was, look, if we need to take this thing to the next level, all right, we basically need to become more and more and more retail, all right? And in Nigeria, if you looked at the population of Nigeria, even if we banked 20% of the Nigerian population and followed our value chain strategy, i.e. following the corporates down to the last customer, we're going to create a successful institution. So getting to Diamond, having established such significant strength in the wholesale sector, Diamond has built itself a nice retail bank, very strong on automation, all right? And that was just basically the sweetest thing that we needed, all right, to make sure that we now had a very strong retail institution. So that was what created, that was what led our overall thoughts as far as the merger with Diamond is concerned.
So far, most of the institutions we're talking about are all financial institutions. But one of the key trends that we've noted, and it's not just in banking, it's happening in insurance, it's happening in the business I am in media as well. There's a lot more tech that's coming into the picture. Right. 20 years ago, you would not consider a telecommunications company like Safaricom, for argument's sake, as your competitor. Today, they are. Are you planning on getting any more tech firms as part of your future acquisition plan?
So we're now taking it to the next step. We've set up the holding company structure, which should start running. And one of the things and areas that we're basically going to concentrate on is technology and the entire payment space. Remember that we have created a fintech foundry, which is called African Fintech Foundry, all right? And we're the first Nigerian bank to create it. So embracing technology, creating technology that is agnostic, all right, that can be used by several different players and separate from access, apart from supporting access, is something that is extremely important to us. So yes, at this next phase of our growth, all right, we have to start looking, particularly at the holdco structure, looking at areas around payments, looking at fintechs, responsible fintechs that can support the growth of our business, and basically creating a very nice explosion in the system and bring more people from financial inclusion into the formal sector.
I'm glad you're speaking along those lines. Let's do a simple what-if analysis. If Paystack was up for acquisition today, would you buy it?
You know, I just remember the .com days, and I'm determined to make sure that I don't do anything stupid. If you want to buy or create a fintech, create one that is of value, one that is creating several levels and levels and levels of transactions that has the talent and that is profitable. All right, I will not do anything crazy like going to pay for something that I can create at lower cost, if you get the point I'm trying to make. Now, I'm not saying anything about Paystack. I'm just saying, so it would always be what value are you bringing to the table and how are you going to transform my business? So you will find fintechs like that. You will find several of them, and there are many young people who are doing very great things, and we seek to partner with them.
Fair enough. Getting back to the firms that you've agreed to buy, let's start with Bank ABC Mozambique. This was, of course, part of the four banks that Equity Bank in Kenya was trying to acquire from Atlas Mara. They didn't close that deal with Atlas Mara, but you did see value in that business. What was it that made Bank ABC Mozambique an asset worth acquiring for Access?
Rama, let me just start by telling you, if we've done this thing too many times more than any other African bank. And if we say we will do it, we will do it. Some people were not able to close on different deals that they did for different reasons, but perhaps we know how to basically identify the value that we want to do. Now, recall that and it's within public domain, when we said we're going to create Africa's gateway to the world, what we meant was that we were going to be the equivalent of Citibank in Africa. And so all payments across the continent would basically, a very significant proportion would be settled across Access Bank's counters. So if you were bringing diaspora flows, irrespective of where you were in the world, you would largely and most likely settle on Access Bank counters. If you were doing trade from the large trade hubs in the continent, whether it's South Africa, it's in Kenya, it's in Lagos, etc., most of them would be happening through Access Bank, either coming from Access Bank UK, but definitely happening on Access Bank's counters. Now, to do all of this, in the countries in which you seek to be present, you have to be more than just a dot, all right? You have to have reasonable presence, all right? So that you can do retail transactions, you can handle trade, you can handle diaspora flows, etc. You can ensure intra-African payments happen seamlessly across your platform. So yes, we had a presence already in Mozambique, all right? But as ABC, our partners in Atlas Mara, were basically divesting from ABC Mozambique, and we felt, look, it's a good opportunity. This is a reasonably strong bank that divested for several other reasons. Why don't we just do that deal? So that was what led us to do the deal with ABC Mozambique. And by the way, it is a nice franchise, and it takes us much higher up, all right, in the league in Mozambique. It would take us, if we didn't do this deal, it would probably take us another 15 years to have the brand, the presence, the locations in Mozambique. So in one fell swoop, we've taken ourselves 15 years ahead of time.
Indeed. Are there other markets across Africa that are of interest to you? Because based on the argument that you're making, we'd like to be the premier bank that handles trade issues across the African continent. By definition, that implies that you definitely need to have a presence in all of the key markets across the region. So you need to have a hub in Kenya, a presence in South Africa, presence up north in Egypt as well. Are there other markets within the continent that are of interest right now?
Yes, I mean, several of these names you've called were present already. We have a presence in Kenya, and we will grow as well in Kenya. We do, as you know, we're trying to see if we can sort out ourselves in South Africa. Hopefully, that should happen in short order. In East Africa, we're present as well in Rwanda. As you go to Central Africa, we're doing Cameroon, should be out very soon, as well as Guinea. All right, so we're moving up across sub-Saharan Africa. Now, we're still trying to understand the Sahel a bit better, all right? I'm talking about more North Africa. So Egypt is a strong market, all right? So we're trying to understand those markets, all right, before we can ask ourselves and take a decision as to when to go there. But Southern Africa is perhaps the largest economic zone in the entire continent. So when you take South Africa all the way to Zambia, Botswana, etc., we will have a strong presence out in Southern Africa. It shares several similarities. There's a language affinity and all of that. So we will be present there as well. So there are different dots that we need to cross in Southern Africa for us to be sufficiently comfortable before we move to another economic zone.
In a sort of roundabout way in answering that question, what we tend to see is that there's a lot of, it's very easy rather for homegrown champions to expand within specific regions. So Nigerian banks will find it relatively easy to spread within ECOWAS, for example. East African banks, or Kenyan banks rather, will find it easy to spread into Tanzania, Uganda, Rwanda. South African banks will spread easily within SADC. But making that jump across those regions seems to be a bit of a problem for a lot of banks. You don't find, for example, a KCB franchise in Nigeria, for argument's sake. So what is it that makes that difficult? Is it that markets are different, regulatory environments are very, very different, or are there cultural nuances that we miss in how individuals approach banking in those specific markets?
So all of the above, you have different cultures, and some people have difficulty fitting into different cultures. You have regulatory preferences, for instance, and some regulators will prefer homegrown or people within the same region, but that is breaking up quickly, particularly as Africa is basically converting itself into a free trade, one zone, if you get the point I'm trying to make. And of course, the capability to bring all of these people together, people with different cultures, and to harmonize all of them and put them as one institution. Now, when Citibank did this across the world, they succeeded. They came here, they were in Nigeria, all right, or they are in Nigeria, they're in South Africa, etc. So we as Africans have to start thinking about life a bit differently. What have these guys done, and how do we learn from it? What did Santander do? All right, what did Citibank do? I mean, and then come home and tell ourselves, let's create an African champion, all right, that is present in the continent and that is present outside of the continent and is a world-renowned institution. So what we're doing is this. We're bringing the best of talent across the continent. And by the way, we're all the same people. We may have certain cultural differences, but quite frankly, when we stay together and go to school together, we are the same people. So we have created a world-class training school that brings all access people within the access world together and train cohorts. Once this happens, first of all, there are access people before you say I'm from Kenya or before you say I'm from South Africa or Nigeria, if you get the point I'm trying to make. So that is where the real power comes from. Getting people to share the same culture, the same values, the same beliefs, and the same aspirations.
getting back into the business of banking, 2019 for many African economies was a very, very tough year, obviously because of the COVID-19 pandemic. In some markets, we've seen over half of the entire bank sector book restructured. Given how rough a year 2020 was in Nigeria and in several other markets across the continent, what kept you up at night with regard to managing your operations amidst this pandemic?
I mean, a pandemic will always create a problem. A pandemic will affect lives, all right? And so you will always be concerned about your people, irrespective of where they are in the continent, because you are one family, and so something happens to somebody, and it doesn't have to be COVID-19. I mean, we also had other pandemics before, all right? And so if you had somebody in Congo, you'd be worried about Ebola. If you had somebody in Sierra Leone, it was also a concern. So this is just one of several. But let me tell you how we chose to look at life. We will not allow that circumstance to define our future, all right? We would have to create and lift ourselves beyond that problem. Not irresponsibly, we will take the necessary measures, but we will have to do what we need to do to continue to support and grow our institution. And that is why you find some people in the course of the pandemic have had their businesses suffer. Some have had their businesses grow. I think we've done better than that. I think we've grown, all right? Our people are upbeat, if you get the point I'm trying to make. All right, because what we sell and the only reason you live is in hope. All right, once you know that your institution will do what it takes to protect you, all right, as much as it's humanly possible, all right, you will do what you need to do for that institution. So throughout COVID-19, what did we do? We created very safe working environments. We created ways to reach out to our customers in a COVID, compliance manner. All right. And so, generally, we'll do better than others. And of course, we showed that we could be much more humane in how we reached out to customers, in things we did for our customers, in the nature of facilities we gave to them, in terms of creating enough room for them to be able to repay. And when problems came, we sat with them and looked for ways to solve it. So for us,
So in terms of having to restructure facilities that your clients had, I mean, I'm looking at your NPL position, 4%. That's a number that a lot of banks would be very, very envious of. But do you feel the need that maybe we might need to extend these restructuring efforts into 2021, maybe into 2022? Might there be a need to raise more capital?
No, I'll not have need to raise more capital. You may find that a few of them may need further extensions because it could be natural. The idea is to just sit down and make sure that you support them to see them come out of it. Once the fundamentals of credit are clear, all right, and so that issues around character, capacity may be threatened a little bit because of the issues that came out, all right, and there's collateral and things like that, and you have seen the fundamentals of the business as being strong. There are ways to continuously manage people to come out of problems. We've had customers who have had problems from the last crisis, all right, almost 10 years ago, and who are still struggling, but they're coming out of it. I mean, yes, the pandemic now came, it set them back a little bit, but quite frankly, in the next 3 years, one day we'll sit down and imagine, wow, the last 12 years were extremely difficult, if you get the point I'm making. But in the main, if you chose the right customers, all right, you will basically find yourself being able to come out of it easier than others. Now, because of the combination that we did, we basically picked up a lot of SMEs who suffered, by the way, all right, from that one back. And all we had to do with them was just to empathize with them. We sat down with them, all right, these are small scale businesses. In some cases, we helped them to jumpstart that business again, all right. Will they do well? I mean, I think so. If they've run those businesses for 15 years and they've been successful, all right, this is a minor problem and it will pass as well. So that is that philosophy.
What percentage of your loan book at the moment has been restructured? Can you give us a sense of where that number is at the moment and what we should expect at least through the rest of 2021?
No, you will never see our NPLs above 5%. It won't happen. Our NPLs are going to be well below 5%.
Okay, fair enough. But the bad loan problem, of course, has been more or less sorted. That's been contained. We've covered, of course, the question around expansion across the continent as well. Something interesting coming out of Nigeria in this last week or so, this initiative from the central bank, 5 naira for every $1 initiative. It looks like an initiative to try and bring in a lot more dollar inflow into the economy. What do you make of that?
Well, the central bank is pulling several strategies to make sure that they manage their reserves to make sure that they make the economy much more robust, even in the midst of COVID. All right, and this is just one of several of those initiatives. And it's not just the Central Bank of Nigeria that is doing it. It's been done in Bangladesh, it's been done in Pakistan. And the whole idea is to encourage diaspora flows, if you get the point I'm trying to make. Now, what you found is that those flows basically tapered down in the course of 2019 and some parts of 2020. Now, when you provide people this discount, all right, it's not even a discount, it's cash, real cash for bringing in dollars. It gives them greater incentives to bring in that money. And we started seeing the results. It's interesting. We started seeing it even just before the central bank announced it, and even after the announcement, because people say, look, wait a minute, what is the return I'm getting on this money? I'm getting good, the right exchange rate because I'm taking my money in dollars, and all right, the system is also making sure that you get 5 naira for every dollar. So it's supposed to encourage diaspora flows, and it will happen.
Have you seen an increase in transactions across your network after this announcement?
Oh yeah. Yes. We've started seeing it, and my sense is that those flows could double by the end of this month of March, and once that happens, you start finding a lot more incentive for people to bring in a lot more in the course of the year.
One of the things that I remember hearing at the very start of the pandemic was this forecast that you might have a drastic reduction in diaspora remittances. A 20% fall was one of the numbers that was being bandied about by the World Bank early on. But over 2020, the reduction that was forecast didn't actually happen. How did you see that evolution of remittances?
It happened. It happened in Nigeria. It happened. There were in the past. If you go back 15 years ago. The amount of diaspora flows were very significant, running to almost $1 billion or more a month. All right. Now, what had happened was it dried up totally. All right. And of course, people were concerned about the macro and chose to withhold their money and worried about where exchange rates were and all of that. Could you get higher exchange rates? Were you going to see a devaluation? All of those sentiments, negative sentiments, sometimes that are somewhat unfounded, all right? But what has happened now is that people are saying, wait a minute, it would appear that where the exchange rates are now is reasonable, all right? And that prices are getting to where they should be. So we can bring our money back. But apart from bringing our money back, with this 5 naira ahead, what does that do? In real terms, all right, you're getting a lot more money, all right? So it encourages several people to bring in a lot more dollars. And we started seeing it with the different actions that the central bank has taken. Now, we're also helped by the fact today, for instance, that crude price is where it is. All right. So all of those elements that help to strengthen your reserve basis, all right, and encourage people to bring money in, as well as exports, which I know that the central bank is now paying a lot more attention to, are things that are going to help to support and make sure that Nigeria retains its pride of place in the continent.
Let's look at the bigger picture. The Continental Free Trade Area, of course, is arguably one of the big stimulus packages, to use the words of Kilemene earlier today, that could offer some significant growth opportunities for economies across the continent. But making payments across the continent is a real pain. That's a real pain point for a lot of enterprises. How do we need to solve those problems? Because it's one thing to say, okay, now you have this Continental Free Trade Area. Great. But if a Nigerian entrepreneur wants to import rice from Kenya, how do we make that payment process a lot easier and painless for both parties?
Ramat, today, if you want to do it between Nigeria and Kenya through access, it's seamless. For instance, all right. Even before now, if you needed to pay your son's school fees and you're in Ghana, you could use your mobile phone and actually make that payment. All right. So it's happening, and that was why I said we're creating Africa's gateway to the world. And so by being present in the critical hubs across the continent, all right, whether it is through the use of local letters of credit or it is different forms of payment mechanisms across the continent, it is getting a lot better. Now, having said that, though, there's still so much work to be done in terms of regulatory interface to make sure that these things become a bit more simple in terms of how it happens. And I think the mere fact that we have started it, all right, means that all our regulators will soon align themselves, all right, and harmonize the payment standards and what the expectations are, for it to happen. Now, there are larger issues, obviously. Some countries may think, well, I don't stand to benefit from this because you are basically playing according to your own areas of strength, all right? But over time, I think as we settle and understand that this can only help production within the continent, all right, it will get better. I'll give you a simple example. You have some of the largest cement plants in the world out in Nigeria. So Dangote knows that I can produce cement not just for Nigeria, but I can produce cement that will be shipped across the continent, even though I have about 6 or 7 plants across Africa. But it then means that the cost of housing and all of those things across Africa is so much cheaper than it would have been without it if you had those trade blocks, if you get the point I'm trying to make. You may find that Zambia may be able to export its goods more to Nigeria with less restrictions than it did before, if you get the point I'm trying to make. And so you then find a lot more trade, and the probability or capacity to build up your own infrastructure, all right, for whatever you're producing, all right, will become a lot more better. So that's I think it's a good thing.
How do we deal with the question of risk management, one, across different markets, but also two, the question of exchange rate volatility across all of these different markets that we're dealing with? Because, I mean, to use all the examples you've used, the Kenyan shilling was around 8% lower against the dollar in 2020. Zambia's kwacha fell by almost 50% against the dollar last year. Nigeria's naira, now seeing it trading at around 400, 410 in the interbank market. The trade opportunity is there, but with all this volatility across the different markets, who takes care of that risk?
So there are different hedge instruments and different institutions that have created different types of facilities to hedge, all right? And tell me, I mean, which is easier to hedge, the Kenyan shillings against naira or the Kenyan shillings against dollar, all right? If at the end of the day, we're all working together, I think we can harmonize all of those things. There was a common currency at some point within Africa, and we had not the echo, there was a manner with which we settled trade, even though it was abused. But I think that if our regulators sit down properly, all right, we will achieve something that can work. Now, that volatility needs to be managed, irrespective of where you're bringing the goods from, all right? But I think we can come up with the hedge instruments to make sure that trade across the continent works in a much more simpler manner than we've done before. And it's easier, all right, than for us. Take Nigeria, for instance. We sell crude out to Europe, and we import petrol, which is much more expensive, refined petrol, than the crude we've given out. We can do that thing across the continent, all right? And it's easier for us to manage ourselves. And at the end of the day, we are developing our continent, if you get the point I'm trying to make. So from a selfish standpoint, even as Africans, all right, we can start to do things that will support the growth of different countries across the continent. And because we're all surrounded by ourselves, all right, that economic prosperity will basically move into each particular country wherever you're close to. So I think that there's so much that can happen. What COVID has taught us at the end of the day is, if we don't support ourselves as Africans, all right, at the end of the day, it's going to be our own problem. And you can't blame anybody for whatever problem you go through. So we must take this first step. Let's harmonize trade. It will come with its problems initially, but we'll fine-tune it. Several countries in the continent have been disintermediated because you can't have letters of credit. We can create payment structures, all right, to ensure that whether it is between Gambia or Sierra Leone and South Africa, or Gambia, Sierra Leone and Zambia, or Nigeria, that all of a sudden trade is happening seamlessly across the continent, all right, for the betterment of our countries and together.
All right. Your final comments, Mr. Wigwe. If we have this conversation this time next year, hopefully in person, not remotely, what will have happened with Access Bank's expansion plan across the continent and the implementation of the CFTA, and of course the need to essentially infuse a lot more tech skills into the business?
So a couple of things that you will notice. First of all, you see much more significant trade happening across the countries in which we have a presence. You will see much more retail transactions. I'm talking of whether it's in terms of payments happening across the continent, all right, in whichever country we have a presence, whether it's Nigeria to Zambia or Nigeria to Rwanda or South Africa to Nigeria, so all of those things will start happening seamlessly. You will see us supporting local corporates in the different countries, all right, that are the champions in those countries and are exporting to other places. So those are the things you see. You will see a new set of African champions who are people that are dedicated in their different countries and who have proven themselves, all right, and we're building capacity with them, all right, to support whatever business they're doing across the continent. You see much bigger access. You will see us stronger in whichever country we are. You see us stronger in the payment space, all right. You see us strong as far as retail is concerned. Anywhere you see us, we will be more than a dot. and we'll have a very strong presence in each of the markets.
All right, we'll leave it there. Herbert Wigwe, Managing Director, Access Bank, thank you very much for your time this afternoon. Much appreciated. And of course, to you, our audience, thank you very much for watching us. There's a couple of more panels coming up and interesting discussions in the African Financial Industry Summit. Enjoy the rest of your day.